Good morning. Sorry, good afternoon. How are you doing, guys? Um, we have Friday, 2nd May, 2025. The time right now is 12:29 GMT, and during 1:30 p.m. we are having high and bad news on the dollar. So we have average hourly earnings. We have non-farm employment change. This is an important news event, and this unemployment rate is an important news event for the USD, including this first one. But the one in which most people pay attention to is the non-farm employment change and unemployment rate for the dollar. So now I'll be going to trading view, and I am looking at euro. All right, so let me do something. All right, so I'm gonna lock this. I'm going to lock this one also. That is my previous day's high. Lock this one also. All right, so I'm going to start from the higher time frame first, then going down to the lower time frame. We are still at the London session. All right, so now I shared something on the WhatsApp community, sorry, WhatsApp channel. All right, and I made mention of the resistance that we are having on Euro USD around this 3 months fair value gap. All right, that is an internal range liquidity that we have because this right here is our swing high or external high, and this is our swing low or external low right there. So price trades higher, trades back to discount pricing of Fibonacci. That should be around 23 Fibonacci level. Yeah, right there. So price trades up 50%, trade down to trades up to the equilibrium, around the equilibrium, trades down to discount, then trades higher, sweeping previous year's high, which is previous 12 months high, right? We saw previous 12 month low, went for previous 12 month high, including that of 2023 high, and trade into premium price where we have that 3 months fair value gap resting right there. The 6 months, not to 6 months doesn't has its own fair value gap, so that is one confusing thing concerning fair value gaps. All right, it looks very different from every time frames. So when I do that of 6 months, it is not even at the 50% of the 6 months fair value gap. All right, so yeah, I will leave that for later. We are just going to be focused on that of 3 months. So we have that resistance going on right there. All right, and right here, there's an inversion fair value gap. So down to the weekly time frame, we have previous week high trades into that fair value gap. Trades low and close. This week opened, took out previous week low, and then kind of feels like it want to go higher, right? So this is it right here on the daily time frame. So the daily time frame, after we dropped massively last week, price trades back higher into the daily fair value gap that we have right here, and then sold off, leaving Monday has a protected high. All right. Then when it's sold off on Wednesday, we have this sell side inefficiency. That was what I labeled right here, has a fair value gap. All right, so this is like the 50%. The previous day's high is the high of the fair value gap, and Tuesday's low is the low of the fair value gap. All right, so here we are on the 4 Our time frame, I love it. This as a structural break, not a general character or a break of structure, but structural break because it broke a low. And then we now have this sell side liquidity pool resting right here. These are equal lows. 3 hour time frame, this is it. Price opened, it trades higher for previous day's high. And I think it's gonna play around right here. And once the news is released, it's gonna sell for the previous day's low. So my directional bias for the news release is to see a sell being triggered. All right, I need to see a sell because we took our previous day's high, and we are trading into that daily favorable gap. So we have the 50% price not fully tapped the 50%. It could want to go deeper into it, and then doing that news release, I'm expecting it to drop. Going down to the 45 minutes, this is the Asian range low where price opened. All right, this is Asian high. So London opened right here, and price has already taken that previous, already taken the Asian high, then went for the previous day's high. Our main focus or main attention should be around New York, and I'm expecting it to go for this Asian low and previous day's low. 30 minutes, not doing anything serious, just resting, just relaxing, waiting for the news event, as I am not to do anything. As we have been trading, we'll be trading in a trade line. So I think that is building up liquidity. So the least I can go could be 15 minutes because I am not interested to look at that of 5 minutes time frame. All right, so let's stop at 15 minutes. So currently there will be traders who will be buying, who will be actively trading this. Might be on this demand zone buying because that is the order block that took out that previous day's high. So traders are active on every sell stops resting on these protected lows. So during the news release, I'm expecting it to, around that daily favorable gap that we have marked out, we are expecting it to trade lower because price is above the open, the true day open. So I'm expecting New York to sell off, taking liquidities of those who have been actively buying right here and go for previous this low. As I'm still expecting Monday to be the high of the week, to be protected high for the week. So yeah, so I'm going to pause and we'll see what happens during the news release. Okay guys, so we're back. It's 11:22. We have 8 minutes to go. And you can actually see what New York is doing right now. It's traded kind of like trying to create a fail high, and it's been dropping on the way. Most people are still holding, I believe. Traders are already actively buying this and still want to see if it wants to go deeper and then sell off. Like, taking the London's high and then go for the London's low. I've already annotated this as the London's low. So, what else should I do? Let me move to another broker. Let me go to forex.com. I'll be back to this later on. I also lab this on forex.com. So if you look closely at, let me go to FXCM. There's a full chart on FXCM. All right, so when you look at this 12-month time frame, this traded into an inefficiency right here on the 12-month time frame, like still being bullish, high, low, high, low, high, and then we traded into that inefficiency, taking out this sell side liquidity. Right, we have that hunt right there, and then whenever there is a sweep right there, we are looking for the origin of where this order was created to go take that liquidity right there. So if we keep scrolling down to the lower time frames, this is it. This is an areas of inefficiency that we are having. All right. So currently, I won't say that we have confirmed an overall long time bullishness, right? Because I'm trying to see how this candle is gonna close right here. All right. If it closes above, then we can still confirm it being bullish. Now, if it doesn't, then yeah, then we'll know that we're going for this high. All right. So remember, I say that consolidating market doesn't confirm a breaker structure. So this right here is not a breaker structure to go downwards. All right, it's a sweep of liquidity from the sell side. And then we are now inside this range high and low. We are now dealing inside that range high and low. Price trades upwards, trades downwards to the discounts, which also have a fair value gap. And also it did similar to what I did on higher time frame, taking out sell side liquidity, right? So take that sell liquidity, be drawn to the buy side liquidity. Once you go to the buy side liquidity, two things comes in mind. Is it going to continue going higher, or is it going to reverse downwards after taking this buy side, like reverse downwards to areas where we have an inefficiency, so that it can use that gaps, that inefficiency to continue going higher and be drawn to the next buy stop. It cannot, though it can possibly do that, but in most cases, whenever I'm seeing inefficiency, I'm expecting price to, in most cases, come down to that inefficiency. So that is what we've been watching for. And what I'll be looking at is this first fair value gap that we have right here, and also this fair value gap that we have right here. These are the two areas where I am watching out for. All right, so we swept the both side of liquidity, not a breaker structure. All right, that is just what I want to explain. All right, we range, took out the sell side, we went for the buy side. All right, and now we are now playing around. That is like consolidating, and the consolidation is due to the resistance from this 3 months fair value gap. All right, so I think, yeah, so that's what we'll be watching now out for. So when May opens, we'll see what will happen when May opens. All right, so I will take this off and take this off. All right, so let's see what happens. Okay, so the idea is that we'll be watching out for the main zone right here, which was in line to that fair value gap I labeled from the daily time frame, because that is the origin of what's breaker structure. All right, and took out that previous 12-month high. Okay, so this is our breaker structure right here, and this is our high. So we'll be using Fibonacci from this low to this high, and that auto block is at a discount, which is 79% Fibonacci level. All right, so we'll be expecting a sell to happen from this point down to that discount to fill up this inefficiency. And then we'll see what happens around here if you'll be looking to buy and then continue going high. Because right now we trade into the 3 months fair value gap, but has not yet confirmed it going bearish. All right, we have not yet confirmed it going bearish. So we're expecting a pullback to be drawn to this inefficiency. And if this is gonna be validated, we continue going higher because this is a high, low, high. All right, no shift yet. So let me go back to this and we'll pay attention to what we were looking at before. So we'll be on the 15 minutes. That will be clear. So we have 2 minutes to go. Oh God, people are not freaking out right now. So we are just here analyzing. Let's see. Let's see what's going on. Okay, 2 minutes to go. We hunt previous this high, trades into the demand zone, trades higher, kind of like fell. Did not go higher, came back again to that demand zone, still playing around right there. So let's see what happens. So we should expect a sell inside that daily fair value gap. So I'm expecting it to go deeper and then sell. But whatever happens, you just watch and see if it goes to the buyers that we have for today. The five. Okay. So what happened? My indicators are gone. Woo! We see that New York session, just like I said, 1:30 p.m. NFP has been released, and we see that trading down, taking that London's low. This is how true they open. I wanted to still go for that previous day's low. London's low has been haunted. Now this true day open is like um, if we're expecting to sell, we want price to sell above the true day open. All right, that's what I'm trying to love it here. All right, so you can actually see the indicators I'm using for the London and New York and the Asian range right here. Okay, so we are now attacking, going for the true day open, the lab bit right here. Make that bigger, put it on 14. London slow, 14. Then we do this New York open. And then over here, lab it has New York high. So let's leave it as New York open. Okay. So those who are buying um, from here, stop loss has been taken, and also those who bought from this low, this lows, and then move to break even to this low, stop loss has been taken also. So I'm taking this off. Don't know how long it's gonna take for it to sell. So maybe I should pause and then yeah, I'm still expecting it to go for this Asian low and then previous day's low. Another interesting thing here is some of us we look at this as a violated supply zone, right? Then what caused the violation of that supply zone? It is this demand zone, right? But for me, I'm not seeing this as a valid area, okay? Because there is no opposite trend violation. Like there's no structural shift for me right here, okay? Also, this is a purge on this high. You can see the three candles right there. Plays around right here. So I should pause and we come back again. Okay, guys, so this is what we got. The market is going to close very soon, and today is the end of the trading week. So we're just gonna break down this stuff from where during the news impact we had this move down to London's low. That other block I said that was invalid. Price reacted from there, it goes higher and went deeper into the daily favorite gap, which was what I was expecting for the news, but it didn't do that. It did it later on. You understand? I was expecting it to go higher before the sell, but it sold and then bought. So if I took this trade and I was placing the sell order and I'm expecting it to continue going lower, then I'll be taken out on break even or my stop loss will be hit. So it still went deeper into that daily fair value gap. And then we dropped down back to the through the open price. Okay. So now the question there is who are those that might be profitable there? Those that are scalpers will be those that profited from it, right? Like to take the sell 1 minute and then they're gone. You understand? They could take this trade during the news impact and they target this low and they're gone. Depends. I don't know who's gonna do that. But for me, I will not be trading this stuff. You understand? I don't specifically trade impact news unless I was on a swing trade. Maybe I took a trade on Monday and I am still holding for throughout the week. So that means I am on a very strong break even. So I might be safe. So yeah. So let's go back to the daily time frame. So this is the daily time frame. So what I want to do is take this off and then close this. No, put it back. Just want to delete all this stuff. Yeah, remove them. All right, so this is it, the daily fair value gap. Right, straight deeper into it, and then that rejection occurred right there. If I go down to the forward time frame, we can actually see that right here. So it's kind of like playing alongside with an inversion fair value gap. There is this resting right here. But that is, by the way, that is not my interest. The interest is that of the daily sell side inefficiency. So we have a sweep on previous day's high, trades into the fair value gap, and then we have that rejection right there. We didn't actually go for the previous day's low, so that means we have Monday has the high of the week, and Thursday has the low of the week. So this is the weekly candle printed for us right there. So the market opens on Monday or on Sunday. Monday gave us a high, Thursday gave us the low for the week, which is very, very much interesting, right? So when next week start off, we will know what we want to see. All right, I still have interest of it filling up this inefficiency right here. So I guess that is all I can say. Nothing serious happened. Price trades deeper. The expectation was to see the sales, but didn't actually happen. Didn't the news impact like doing the NFP, but after 1 hour after the NFP. So yeah. See you guys next week. Take care and be safe.